Alright guys, so this is the second episode on Forex Terminologies. So if you are new on my channel, please go and watch the first video so that you'll be able to understand what is really going on these videos, right? So the next thing that we are going to be continuing on is going to be AX, right? AX. So AX is the price at which the market or a broker is willing to sell you a currency, willing to sell a currency pair to us as traders, right? The market, let's say the market price is at 1.1 something, like that number is at that particular time. That is the price at the market is willing to sell us that price, right? So that is the ask. If a bid is where the market is, where we are buying, right? The price that the market put for us to buy. Sell is ask, buy, bid is buy, right? So we have stop loss when it comes to the market. We have stop loss when you enter a trade. You have stop loss, a preset order that automatically close a trade. That automatically close a trade to limit losses at a specific price level. So stop loss means, let's say example, you enter a trade, you buy at a particular price that a broker or the market is giving you a price, you buy from there. When you buy, you will have something called a target take profit, or something that is called a stop loss. So the stop loss is a pre-order, right? Let's say market have not been in that price yet, but anytime market come to that price, it will close the trade automatically without you being online or you knowing whether the market was there or not, right? So let's say example, right? Stop loss is a pre-limit order that I set. Let's say I analyze the market and I was expecting the market to go my way, but if the market goes on the other side, that means if I put my stop loss at a $50 limit. That means if the market comes at that level, it's going to close that $50 automatically. I'm going to lose $50 automatically, and because that is what I plan to lose when the market did not come, when the market did not go where I expected. Right? So that's basically what a stop loss is. So we are continuing on what take profit. What is a take profit? Take profit is the same, right? Every set order that automatically close a trade once it is a desired profit level. Stop loss is once it is like on the negative side. The TP is the positive side. So now let's say example, I analyze a trade. I'm expecting if price is at that particular level, I'm closing automatically, right? So how much am I going to make is the desired profit? Right? Let's say I receive $50. In that case, I'm expecting 500. So if price is at that particular level, it's going to close 500 profit automatically. So that's what a take profit is. So let's continue on buy, right? When it comes to the market, buy or long position mean a trade open when a trader expect the market to go up. Right? If you expect the market to go up, you are going to buy. If you expect the market, right, that is what buys mean. So we are going to continue on what's short, right? Sell or short position. Sell or short position is a trade open when a trader expect price of a currency to fall. Right? To analyze the market and you expect the price of that particular currency to fall. In that case, you open a sell position or you go short. Right? So that's what a sell means. So we are going to continue on balance, equity, and margin level. These are three things you have to understand. Balance is the amount of money that you deposit in your trading account. Right? Equity is when you enter a trade, the balance is going to be the same, but the equity is if the trade is going positive, what add up to it is that equity. If the trade is negative, what goes below it? If it is negative, that's what your equity is. The equity is the total amount of value, including profit or loss from open trades. Right? So equity plus balance is equals to floating profit or loss. That equity, if you add balance to it, is going to be your floating profit or your loss. If you are floating in profit, if you add it to if you are floating in profit, that is what your balance is going to be. And if you are negative, that is what your balance is going to be if that trade is closed, right? So you have to understand balance, equity, and you have to understand margin level. What is margin level? So margin level is a percentage showing the relationship between equity and margin used. Right? Equity and margin used. You remember I told you guys leverage, right? And margin is what is set aside as collateral, right? So how much collateral is used, right? So it has to determine how close an account is about to a margin call. Margin call is when your broker call you and tells you your account is about to blow. Your account is about to blow. That means the amount of money that you deposit cannot support the open positions, right? So that's what the difference between balance, equity, and margin. So we are going to continue on Forex terminology. We are going to continue on margin call. It's basically a warning from a broker, right? So when you have a broker, you will have someone that manages your money. So that guy is going to give you a margin call, warning you that the amount of money you deposit is too low to support those open positions, or trade adjustments, or you have to deposit more money so that it can be added. If not, your account is going to be blown and you're going to have zero in your account. That is what a margin call is. When you have a margin call, you have to understand what is stop at level. There are brokers, let's say ANC brokers, before they will give you a margin call, they might just stop you out. Right? A stop at level is when a broker closes a trade automatically to avoid too much of loss. Right? There are some loss that brokers might avoid, so they will just close that loss automatically. That is what a stop at level is. So that is something very important that you have to understand. So once we are done with stop at level, you have to understand what is volatility. You have to understand what is volatility, because when you come to the forex market, there are times where price moves very fast and there are times where price moves very slow. Right? So if there's a time where price is moving very fast, that is, the market is volatile. If price is not moving very fast, that you can call the market is not volatile. So what is volatility? The degree of price movement in a currency pair, higher volatility, faster and larger price changes. Right? So that's what a volatility means. If the price of the market is moving very fast, the fluctuation of price is moving very fast, that means you have a higher volatility. If it's moving very slow, you have a lower volatility, right? So once you understand volatility, you will have to understand what liquidity is, right? You have to understand what liquidity is. So what is liquidity? Liquidity is how easily a currency pair can be traded without causing major price shifts, right? Without causing major price shifts. Major pairs have the higher liquidity, right? So as we are talking about forex terminologies, we have three different type of pairs. We have major, we have exotic, and we have codes, right? But in other episodes, we are going to be talking about that. So let's focus on the simple terms that needs to be understood, right? So liquidity is how easily a currency pair can be traded. So that's what a liquidity is. So on forex terminologies, we are basically going to be continuing on what a support level is, right? So a support level is basically a price zone where buying interest is not strong enough not to allow to prevent sellers from going forward, right? So let's say example, we have this bottle of water, and this bottle of water, the price of this bottle of water is like $150, right? It's $150. That means anytime price comes here, price can go higher, 155, 160, but anytime sellers come down to 150, price goes up, right? It cannot go below $150. So that's basically what support level is in the forex market. So the second thing that we are going to have is resistance. So resistance is a price level where selling interest is strong enough to prevent buyers from going forward. Right? The same bottle of water can be sold, let's say, for $45. Right? Price can go up to 50, but if not, it cannot go below $45. So that's basically what a support resistance level means in the financial market. So the third thing that we are going to be talking about, consolidation. On trend, we did talk about uptrend, downtrend, and sideways. So sideways is basically what a consolidation means. When price is ranging between 145 to 150. As an example, this bottle of water is, let's say, 45, right? So it was 50, it's come to 45, go back to 50, come back to 45, right? It's ranging between 45 and 50. When it comes to 50, it cannot go above. When it comes to 45, it cannot go below. So that's basically what a consolidation means. So so this is going to be basically the last slide on forex terminologies, the first episode on forex terminologies. So we are going to be continuing and going deep into what forex really is and how you can be able to make money trading. So,